Hi everyone. Next step to sorting out your finances after separation. How to remove your ex-partner from the mortgage. This is in Australia, and in Australia it's not just a form. You're essentially reapplying for the loan on your own. A lot of people underestimate that part and get blindsided. This guide walks through it clearly so you know what you're in for. So separation is already heavy enough without the financial stress that comes with it. One of the biggest sticking points is the mortgage. If your ex is still on the loan, they're still legally responsible, and so are you. Until it's sorted, your finances are tied together whether you like it or not. Let's break down how to actually get them off. So step one, you need to understand what removing them really means. You're not just taking a name off, you're taking full responsibility for the debt, you're applying to the bank as a sole borrower, and you're proving you can afford the loan on your own. So the lender will treat this as a brand new application, not a simple admin change. Step two is get a property settlement agreement. Before the bank even gets involved, you need a clear agreement about who keeps the property. This can be done via consent orders through the family court or a binding financial agreement. This matters because the bank will often require it. It does protect you legally and it avoids future disputes, which is why the bank might want to see it, to make sure that your ex can't come back at you and say, no, I want half the house again. Step three, check if you can afford the loan alone. So here's where reality kicks in. The lender will reassess your income, your expenses, any dependents, any existing debts you have, and current interest rates, not what you originally had. So the hard truth is, if you don't meet their criteria, they won't approve the transfer, even if you've been paying the mortgage yourself. Step four, refinance or a loan variation. Normally it's not a variation, it's definitely a refinance, because to take them off, you've got to redo everything. So you can do an internal transfer, same lender, simpler process sometimes, still requires full credit assessment. Option two can be refinanced to a new lender, so you may move the loan elsewhere. You might get a better deal, and useful if your current bank says no. So a broker can be really valuable here. They can tell you quickly if you're wasting time with one lender. What most people don't understand is the banks, in particular if you have children and you're getting family tax benefit and or child support, if your children are under the age of 11, just about anyone will take that money as part of your income to help you support being able to borrow the right amount of money. But if the kids are over 11, then you're starting to narrow down your lenders. Not all lenders will do that. And a broker will be able to tell you which lender will do it when your kids are 15 and 16 or 14 or 12. That's even more frustrating when they're just over the limit. So talk to someone that knows what they're doing. Step five is actually the property title transfer. So removing them from the mortgage doesn't automatically remove them from the property title. You need a transfer of ownership through your state's land titles office, a solicitor or conveyancer to do that, and stamp duty consideration. It's often exemption in separation, but it depends on the situation. And both the loan and title need to be updated. If with a separation, you can often get the exemption purely and simply because you're going through a solicitor to get your agreement and they'll know which forms you need to put in. Step six is to pay out or buy out your ex. If there's equity in your property, your ex may be entitled to a share. This could mean paying them a lump sum or increase the loan amount to fund the payout. You've got to be able to service that debt. So that's why I say talk to someone and know what you can borrow before you agree on anything. An example is if the property is valued at 800 grand, your loan might be 500, the equity is 300 grand. If that you're splitting that 50-50, you may owe them 150,000. Now, there's lots of things that can affect that. Who put what deposit in, what other assets you've got, what super he's got, what super you've got. So there are negotiations there, and a good family lawyer will work that out for you. But that payout will often get rolled into your loan. Easy. Step 7 is get bank approval. And now this is the gatekeeper. Everything hinges on this. Your bank needs to approve your ability to service the loan, the updated loan structure, the removal of your ex. If they decline, you can't remove your ex, and you may need to sell the property. Now, that may be a quick and dirty option to do, but you'd better figure that out before it's too late. It's really sad when I get to that point with someone who's signed an agreement and they realise they can't actually do it. So what are the common pitfalls that catch most people out? So one is assuming your income is enough. Lenders are strict. You can't assume anything. Ignoring updated interest rates. Repayments may be much higher now. Forgetting about childcare costs. That heavily impacts your borrowing power. Not formalising the agreement legally. Last thing you want them to do is to change their mind at the last minute. Or thinking, I've always paid it, so I'll be fine. Banks don't see it that way. Bank is a 4-letter word. They're in it for them, not you. So what if you can't get approved? It's not the end, but your options change. You may need to sell the property and split proceeds. You may need to keep the loan joint temporarily, risky long term though. Have a guarantor, you can do that. This is where good advice matters most. Some final thoughts. Getting your ex off the loan is absolutely doable, but it's not automatic and it's not always easy. Key thing to understand is the bank has to be comfortable with you alone. If they're not, the deal doesn't go ahead, and no matter what's been agreed between you and your ex. If you're in this situation right now, don't guess your way through it. A quick borrowing assessment early on can save months of stress and potentially a forced sale later. Do not rely on online calculators because they often don't take into account a lot of things that are involved when we're talking about what the banks will give you. So if you want, I can walk you through whether you'd likely qualify on your own, a rough borrowing capacity, and smart ways to structure the buyout. Costs you nothing, but it may give you peace of mind. Have a great weekend, everyone.